Hello, I'm David Jones. I thought I'd do a slightly different video actually and do this every month. So as we're at the start or the beginning of a new month, I thought I'd do a video looking back at my trading and trades in March. What went right, what went wrong, the performance, and what can I do to improve on it. I think reviewing your trades is a really important part of the trading process. You can pick up on perhaps any biases that you might have, any common mistakes you make. It definitely still helps me, even after all the time I've been trading, just to sit down and take a look. So I thought, let's do it every month. Where I went right, where I went wrong, and a look ahead to what I think is going to be interesting in the month ahead. And for me, there's lots of markets to watch, but there are three markets in particular that I think will present opportunities in both directions. So I'll talk about those during this video as well, where we look back on the trades during March. So March ended up being a winning month for me after a losing month in Feb. I think it was the first losing month I'd had since September. Losing months happen. So again, you need to make sure your risk management and everything else in trading is right. So when you do have a month where it feels like you can't get the markets right, you're still in the game. You do not want to be in a position where just because you have a string of losing trades, you end up blowing up your trading account. Before we get into it, a quick message about my website. So davidjonestrading.co.uk is the website. I send out a newsletter every week, normally over the weekend. If you go to the website, you can scroll down and sign up for that. I've run trading courses now for the last couple of years. The trading course I run, there are two parts to it. There's the short-term approach, which is trading, which we'll have a look at, the approach that I've used during March, trading mainly on hourly charts, looking at short-term movements in the market. Medium-term trading based off daily charts, so trying to get the bigger swings in the market. So both of those courses are part of the overall course. There are a few different options now because I've jigged things around, but take a look at the website and see perhaps which one will be best for you. As it's the beginning of a new tax year here in the UK anyway, I thought I'd do a promotion, try and kick the year off. So if you use the code April20, if you want to take part in one of the three options for the courses, you'll get a 20% discount. I'm going to leave that code running until the end of the weekend coming up. So until the end of 16th of April, that code will run. So if you go to the website, use the code April20 and you'll get a 20% discount off the courses. If you have any questions, you can message me through the website or drop me an email or have a chat, whatever you want to do. But for now, let's take a look at what went right, what went wrong in March, and what I think is going to be interesting to watch in the month ahead. So just to set the scene, if you've been watching the channel for a while, you'll know from November through to the end of January, I traded an account using the approach on my course, and I risked £100 per trade on that. I've talked about the results before, but over that 3-month period, risking £100 per trade, the profit was just under £2,200. This is on a £4,000 account using the principles I outlined on the course. And the reason I'm going through this is I've started trading my own size again now, but for the purposes of this video, I'm going to normalize it all back to £100 risk per trade. So it gives us a comparison and a continuation from that period then. And I'll talk about the full results again in a couple of months' time. But let's take a look at what March was like for me, for my trading. So I had the first losing month in February for more than 6 months. And one of the problems was in February, I didn't have any big winners. I didn't have any trades that made a multiple of my risk. Thankfully, this was different in March. So the two biggest winners I had in March, 15th of March was when the trade was opened, was a long on the NASDAQ. So again, remember, I'm normalizing this back to £100 risk per trade. So that ended up making £214, so twice the risk. And then a trade on the FTSE, which we'll take a look in a second, 28th of March on the FTSE, that ran actually to the 3rd of April. That made more than 2.5 times the risk. And this, for me, is really the key to what tends to be a good trading month. Of course, there are going to be losers in there. And as I say, they're all normalized to £100 for the purposes of this video to keep the example going with the trades I've talked about in the past. So assuming a £4,000 account, 2.5% risk per trade. So there are going to be losers along the way, but the thing that really makes the difference is at least a couple of decent winners during the month. So the month was up 450 in closed trades on the month so far. And if I scroll down to look at the chart, so that's the chart, the P&L going all the way back to the beginning of November when I started trading it and talking about the results based on this £4,000 account. So a losing month in Feb, and it started bouncing back. And what I really want to see for this £4,000 account is it for it to once again break out to fresh all-time highs and continue the trend, because the trend in your P&L is a trend the same way we have in the markets. But let's go back to what I did right and what I think I did wrong in the month. Let's talk about, first of all, the biggest winning trade on the month for FTSE. So I put the trade on the 28th of March is when I opened the trade. Let's take a look on the charts. So here's the FTSE 100. This is an hourly chart, and I've picked up on the lows from the 20th of March. So I did this trade on the 28th. So the market had moved higher, had sold off for a couple of days, bounced back, and started making something of a recovery. So when I saw the market dip back on the 28th of March, I thought, well, perhaps this is a buying opportunity into this trend. So I ended up buying here. It was around about 1 o'clock in the afternoon. The market had been selling off all morning. These are hourly candles, don't forget. I bought in about 74.80 and a stop the other side of 7400. So in this example, coincidentally, it ended up being the other side of the trend line. I mean, for me, placing stops is absolutely critical when it comes to trading, because of course it's the bit that determines, well, when you get out, when you decide that you're wrong, the trading idea was wrong, so you manage your risk. And also, you've got to place them in the right place so you don't just get knocked out in the noise of the market. So you're still in the trade, even if the market gets a bit volatile. You've got to give the market time to breathe. So I ended up buying in at 74.80. Stop loss was about 80 points away. The trade worked for a couple of hours. So the market moved slightly higher. 5-7 points in my favour, something like that. But as the day went on, the market sold off. And I thought, well, perhaps I've been a little bit early, but my stop's in place. I'm not going to worry too much. Let's jump forwards and see what happens next. The next day, the market moves higher. So by this point, I'm about 80 points in profit. So this is when I might think about moving my stop loss. I think, as I've said before, the vast majority of trades that I come out of, I come out on a trailing stop loss. You can find out more about the broker I use for my trades and trailing stop losses by going to the website. I'll put a link in the description down below. And it ended up being a great trending trade in the end. So from getting in here about 74.80, we had a fantastic run over the last few days. And I ended out coming out on this day here for about a couple of hundred points, slightly under a couple of hundred points. So the trade ran for about a week overall in the end. But as the market, it was a really easy trade because the market continued in my favor. I'm just trading the stop up and then bang, the market reverses. So I come out, book the profit, and I can look at the market with a fresh pair of eyes. So that was the biggest winner. A great trade, trading with the trend, sensible stop loss, and it worked well. When trades just move in your favor day by day from a short-term trading point of view, then managing the trade is really easy. Where I messed up, it's not a loss because losses are part of trading, but it's a trade that I missed out on, which would have been a big winner. Let me show you. So the trade I missed out on, and I almost did and I didn't, was oil. So the price of oil from the beginning of March, 7th of March, started off around $80.50, traded down to $64.50. It's the massive sell-off, 20% slide in the price of oil in about 2 weeks. And then the market started turning around and started rallying higher over a few days. I was looking at it on this day here towards the end of March, Thursday the 23rd of March, and thinking I'd like to buy a pullback. And I remember I was doing the live stream, I think, on the Friday, and I was thinking about buying it in here around 67, 67.50. But by the time I got around to looking at it later in the day, it had jumped up to 69. And I thought, well, I don't really want to chase the market. I'll wait till the following week. I'll wait till Monday, Tuesday next week. I'll buy in and I'll see where this market goes next. Of course, if we walk forward in time, you can see the market never really looked back. This is where I was thinking about buying it. I'd missed out on what I thought was a good price. Thought I'd wait for the pullback. The pullback never came. And by the end of the next week, the market was trading at 75. So by being reluctant to buy at 69, I missed out on a $6 move in the price of oil. So about, not quite a 10% move in the price of oil. But then, of course, it gets worse because over that following weekend, we had the news from OPEC about a surprise cut. What did the price of oil do? Jumped up to above $81 at the beginning of April when Sunday night trading started. So it's a great lesson there and a great reminder there, you know, that if you have strategies and a process to follow the process and don't second guess yourself. And I was definitely second guessing myself a bit on this trade, assuming that on Monday we'd get the pullback and I could buy in, where actually the trading opportunity was here as I'd been watching it on the Thursday to buy the dip on the Friday. But because I got involved in other things and thought actually it can wait till Monday, I missed out on what ended up being, you know, a really great trade where the price went from $69 to $80 plus. And again, because it was quite a smooth trend, a trailing stop would have worked well in that. So you can't win them all, but it does stick out for me in March as a great opportunity missed. And it's one of the things that made me think about focusing on a smaller number of markets, not trying to trade, you know, 10, 15 different markets from a short-term point of view, just to focus on the bigger markets. And it's definitely something I think that has paid dividends over the last couple of weeks. So to find out more about my trading course and use that voucher for the next week, if you go to the website, davidjonestrading.co.uk, there's all sorts of information there about content, the performance, the different courses, the subscriptions available, the broker I trade with. If you go to that's often a question that gets asked, who do I trade with? Go to the broker. I've done a short 10-minute video on why I trade with the broker I trade with, and there are a couple of specific reasons, mainly to do with reporting and trailing stops. But if you go to the website, davidjonestrading.co.uk, and if you'd like to sign up for a course, you can use the voucher to sign up for a course. Now let's take a look at what markets I'll be watching in April. Clearly there's lots to watch in markets at the moment, but there are three I'm going to be watching. First of all, stock markets. So US markets, S&P and the NASDAQ. So if you look at the S&P, we've had a good run off the March lows in the S&P. What happens up here near the highs for the year, around 4,200? Are we going to get a breakout in the S&P 500 that continues the trend, continues the recovery that we've been in since October last year? If we take a look at the NASDAQ, just last week, the NASDAQ did trade to its best levels since about August of last year. So again, do we see this market continue to push higher? So what's going to happen with stock markets? Are we going to see further strength? You know, I'm still very much in buy the dip mode when it comes to stock markets. The other interesting market is the US dollar index. I talk about this a lot on the live streams. I think it's a great market to watch. It's the dollar against a basket of different currencies. And since September of last year, we've seen the dollar index in decline. What's interesting, it did have make a base in early Feb around 100.85. We saw a half decent rally off that, but failed ahead of the highs from early in January. And you can see we're back down here again. So over the last week, we have seen a bit of strength come in for the US dollar index. I think that's going to be another interesting market to watch in April. You know, is this correction from September over? It builds a base and we start to see a recovery in the US dollar from here. Let's see. And then finally, and briefly, oil. You know, we've seen this jump up in oil after briefly hitting its lowest point. So in March, it traded to its lowest point since December 2021. Then we had the surprise cuts from OPEC. It jumped up above $81 and it's sort of stalled there for the last few days. What happens next for oil? Is the market going to decide, well, actually, despite this surprise cut from OPEC. We think it's a bit overstretched up here, and we'll see it sell back and retest perhaps the mid-60s. Or has it changed the picture for oil, and we're going to see it sort of crack the top of this old range, and the highs come in ahead of $84 from early in December last year. So I think that's an interesting market. So for me, stock markets, as always, the dollar index, is it building a base? And oil, what happens after this surprise cut and this surge? So I think 3 really interesting markets to watch in the month ahead. That's it for this slightly different video. Like I say, I think I'll do it every month. At the end of the month, beginning of the next month, I'll do a retrospective look at the month that went before. It'd be interesting to see how April turns out. Lots to watch. There's always, it's been a pretty volatile year in markets, very much still focused on inflation and interest rates. Let's see what April brings. Don't forget, go to my website to sign up for the newsletter. Use that code April20 if you'd like to take part in any of the courses and get a discount. Any questions, drop me an email. But for now, that's it. So until the next video, good luck with your trading.